On this Wednesday, wheat has enjoyed some double-digit gains through a good part of the trade day today. However, the corn market was waiting to see what come out in that ethanol report. Let's go over here to the corn market right now, where July is down 3.5 cents, 3.80 1/4. December corn down 2.5 at 4.01 1/2. And again, we ratcheted this market lower on the low side. Went all the way down to 4.01, but we are 1/2 penny just above that. The July soybean contract now down 6 cents at 9.95 1/4. That is the low of the day. August also at the low of the day at $10.50. And September on the low of the day at 10.06. That's down 5.5, and technically that will not bode well for the charts. Over to the wheat market, and I mentioned here where we've had double-digit gains a good part of the day. July Chicago wheat was as high as 14 cents earlier today. Now at 11.5 higher, 5.21 1/2. The Kansas City wheat market for July is up 11.5 cents, also 5.40 1/2. Minneapolis wheat, not quite as high here, up 2 pennies though, 5.99, been as high as 6.08. Cotton market higher also, 1.16 higher for July at 91 cents even. December up 163 points at 90.61. The ethanol report that we had out earlier this morning was just kind of mixed and kind of unchanged. Corn market just kind of took a glance at that. Didn't really have much of an effect, though. Last week, 1.041 million barrels per day were produced, same as the prior week, and that's just slightly below the 1.042 million barrels per day 4-week average. And the ethanol stocks at 21.9 million was actually up 600,000. To the edge of the trading floor we go. Scott Gecas, Longleaf Trading, standing by here with us. Scott, as we get closer to the end of this day today, we see where the corn market and the soybean market just continue to slip back under pressure.
Yeah, with the soybean market in particular, everything's going on with the trade walks, waffling back and forth. Who knows what's going to really come out of this? You know, the market has a bearish tone due to all the trade war talks as well as the weather. You know, you're going to need some type of weather change or something positive coming out of this between NAFTA, the Chinese trade war talks, just to push the market a little bit higher. So the good versus excellent, they came in at the highest records ever, you know, about 75%. You know, yields going forward are going to be in the main focus. If we can get about 52 bushels per acre, you know, that's going to be at an 11-year high. That's definitely going to drive a little bit more price levels higher. So that's something to keep an eye on. You know, we're going to still keep in mind that, you know, the supply and demand report next week, that's also going to be a main focus.
What's the trade saying about that supply and demand estimate yet, or is that even on their radar? Will we have to wait until the first part of next week?
Yeah, I think we're going to really have to wait in the first part of next week. As the weather person already said coming in, you know, it was very dry. You know, the weather over the last week helped conditions out tremendously. So we're going to have to see how that's all going to play out next week. All
right. Higher in the wheat market today also. It looks like harvest pressure really not having much of an effect at this point anyway.
No, I think one of the key factors driving the wheat market in particular is that the Chinese harvest was at a 4-year low. So what that means is they're going to have to import more wheat. I mean, it's just they have to. So I think that's one of the biggest factors driving that. They're still going to be waiting for a little bit of comments coming out of that Russian Grain Council conference as well.
All right, Scott Gecas here with us at the edge of the trading floor. Scott, hang around with us. We need to take a real quick break. When we come back, we'll talk about the cattle and the hog market next here on the Market Day Report. Let's begin with the live cattle market. That market has been higher throughout, well, all morning, ever since we opened up first thing this morning. June live cattle up 122, and that's kind of a little bit of a follow-through from the finish that we had yesterday. And I will admit that we did see both sides of unchanged yesterday, both higher and lower. But today, June up 118, 108.38. August live cattle up 63, 104.68. And October up 45 at 107.35, with December up 43 at 111.85. August feeder cattle up 80 at 146.92. September feeders up 80 at 148.15. October up 93 at 148.55. At last check, we still do not have any cash cattle trade. Some of the bids were coming in around 107 in the south, 177 for the live basis or the address basis in the north. But asking prices, they firmed as well. Now up around 115 live and 183 dressed. Over to the feeder cattle market, This market also higher. The August feeders up 90, 147.02. September up 87, 148.22. The hog market today also higher as well, with June up 158 at 78.10, July up 283 at 79.85. August up 185, 77.50. Let's go back to the edge of the trading floor in Chicago now, where Scott Gecas is standing by with us. Well, Scott, as you and I were visiting there during the break, we were talking about the volumes of trade here in some of these commodities.
Yeah, the volume for the last 3 weeks has been very dismal. It looks like that the summer volume is coming into play a little bit earlier than everyone's expected. So you're seeing a lot of spikes, a lot of pops, a lot of drops, and that's due to the low volume. You're starting to see a little bit of volume here and there, pushing those spikes and drops, and then they come back right in the range. So pretty much what that summer volume means to traders is, pretty much halfway through the day's done. And then, everything is just settles, and then you don't see any volume until the next morning.
You mentioned a range. It seems like this live cattle market is kind of caught in a range right now, particularly with this new front month contract.
Yeah, it's been stuck in that range. You still have that gap to fill all the way up to 110. We're very far away from it, but it looks like it's been stuck in a range between like around 104 to about 106 or so. We're going to remain bullish above that 104 level, though.
How concerned is the market about going down and testing below 100 again then, though?
Right, and that's a big 104 level. So if you see that 104 level being pierced, you're going to see a strong level of selling pressure. Whether that continues, it's going to all depend on how the volume is going to react. If you see it pierce with that little spike with less volume, you could probably consider it that it's going to close over that 104 level. But if it pierces that 104 level with strong volume with continuation, then I believe we will test that 100 level.
What about over on the hog side of the trade, Scott? Same thing here. Is it a weak volume there as well?
Yeah, it's a weak volume, but the hog market has a lot of different stories in all that into effect due to everything, all the tariffs with Mexico going forward. Cutout values were pretty strong. I think that's the reason why you're seeing strength in the hog market. But with that supply-demand issue, production is going to be the highest on record from the second to the third quarter. So they need the exports. If the exports don't show up, if they don't get those exports out, you're going to have big supply concerns. You can expect that hog market to collapse. It's going to be that detrimental if we can't get these exports out with the oversupply concerns.
Scott Gecas with Long Leaf Trading here with us. And Scott, we look forward to having you back tonight for the Rural Evening News. We'll talk to you then.